Bitcoin's going to have the higher Sharpe ratio. Bitcoin's going to have the higher vol. Bitcoin's going to have the higher performance because it's engineered and it's accessible. There's going to be someone in a country doing something with capital that you don't understand, that's illegal in your country, that's going to make you money, right? The redneck in Arkansas with Bitcoin buried in their backyard is going to make money off of some rocket scientist in Singapore or Beijing doing something with some capital they've never heard of in a way they can't understand, that's either illegal, and they'll be doing it while the guy in Arkansas is sleeping. But the dude in Arkansas is making money.
Bitcoin has the potential to become the most valuable asset in the world in a few short years, not through hype, but by deliberate adoption. Michael Saylor, executive chairman of MicroStrategy, made a strong statement about that. He thinks that Bitcoin is becoming the cornerstone of a new financial system and is no longer merely a speculative investment. According to Saylor, it will not be long before the trillions of dollars that are currently held in gold, bonds, and cash will turn into Bitcoin. And things are already getting out of control because to the growth of corporate treasury allocations, sovereign interest, and institutional-grade ETFs. Saylor asserts that Bitcoin is the most accessible, transparent, and secure asset in history, in addition to being the toughest. There may be a supply shock unlike any other once institutions fully comprehend this. When that occurs, you may surpass 99% of the world's population if you control even a small portion of a Bitcoin. If you're intrigued by bold predictions and deep financial insights, make sure to like this video, subscribe to the channel, and turn on notifications for more engaging content. Thank you for your support and enjoy the video.
I think that Bitcoin will outperform the S&P index. And I think it's very simple as to why it will outperform the S&P index. It doesn't have the counterparty risk of corporate structures. And it doesn't have currency exposure, right? So the S&P is saddled with a huge amount of corporate risk factors, dozens and dozens of them, tariff, supply chain, etc. It's got legal risk, it's got political risk, it's got physical risk. I have warehouses, I have nexus, I have an operation in Ukraine, I have, natural gas facilities in Iran, right? There are a lot of things in the real world that constitute risks in the S&P. If I strip away the physical risk, and if I strip away the political risk, and if I strip away the management risk, and then every company takes in cash flows in pesos and naira and euros and CNY and rubles and dollars and Canadian currency and AUD and whatever. So when you strip away all of those risk factors and keep the pure capital, you've got Bitcoin. So whatever those things are, Bitcoin will be more than that. How much more? Or like what is the cost of that? 6 to 8%. A year. So if you're targeting the S&P at 12, you target Bitcoin at 18 to 20. Why will it be 18 to 20? I stripped away the risk factors. I also stripped away the constraints. For example, you cannot go long 50x on Apple stock on Sunday morning in Iran. We could talk about why you can't, but you just can't. So you can't go long and you cannot short an equity 20x on Sunday morning. So you have all of these guardrails on equity, and they limit the leverage, they limit the utility. If I had pure capital and I could have unlimited leverage, unlimited utility anywhere in the world, 24/7, 365, there are no holidays for Bitcoin, right? So what happens on a bank holiday to a security that you should short or you should go long? Well, you can't. Okay, so that bucket, that benchmark, which is the S&P, it's less volatile, it is less liquid, it is less useful, it is more risky, it is more diversified, and it's got some human factors in it too. I mean, the S&P board just decides what to put in it, right? Like maybe they don't put the right thing in, maybe they leave something that shouldn't be in it, right? So if you're looking for a pure, objective monetary index governed by the laws of nature, the most useful type of capital asset in the world to everyone under all circumstances at all times, that's Bitcoin. So, if I were to say it ought to be twice as performant as the next best thing, that wouldn't be unreasonable. My forecast is it's probably 50% better maybe 60, 70% better than the next best thing. So my long-term forecast is like 21% ARR and 21 vol. And I would say, the S&P will be more like 10% ARR, 15 vol. Bitcoin's going to have the higher Sharpe ratio. Bitcoin's going to have the higher vol. Bitcoin's going to have the higher performance because it's engineered and it's accessible. There's going to be someone in a country doing something with capital that you don't understand, that's illegal in your country, that's going to make you money, right? The redneck in Arkansas with Bitcoin buried in their backyard is going to make money off of some rocket scientist in Singapore or Beijing doing something with some capital they've never heard of in a way they can't understand, that's either illegal, and they'll be doing it while the guy in Arkansas is sleeping. But the dude in Arkansas is making money. So this is the highest common denominator. Whereas, an American company that owns stuff in Arkansas is not getting its value increased by some Chinese actor, right? Or some, there's no nation state central banker that's going to do something to enhance your Arkansas strip mall or your whatever best idea. So that is the basis of my assumptions about the long-term performance of Bitcoin. Obviously, it's all driven by some base rate assumptions. One base rate assumption is how fast does the money supply expand? Another base rate assumption is how rapidly does technology improve and how much productivity is driven by technology. And if you're bearish on technology and if you believe inflation is going away, then you would probably have a lower estimate than me.
According to Michael Saylor, Bitcoin will outperform the S&P 500 in the long run, although not by much. In contrast to the S&P 500's average annual growth of just 10%, he projects that Bitcoin might expand by 21% over the next 20 years. Even having a modest quantity of Bitcoin today, just a few Satoshis, could prove to be one of the best financial moves of our time if he is correct. Please take a moment to like this video, subscribe to the channel, and enable post notifications for future Bitcoin, macroeconomic, and digital asset content before we go any further. Now, let's get into his powerful predictions.
Yeah, no, that makes a lot of sense. So I guess, would you say that in a way Bitcoin is like a global productivity index fund to some extent?
It's a global monetary index, or you could say it's the greatest global investment index in the world. If you want to characterize as global productivity index, yeah, you could do it. If the world's more productive, that will flow into Bitcoin. If the world inflates the currency supply, it'll flow into Bitcoin. If the world is more insecure, that should flow into Bitcoin, right? So it's being driven by chaos. It's being driven by order. It's being driven by conflict. It's being driven by the robots, right? Yeah. Eventually, if the robots do all the work and there's 1 trillion AIs in cyberspace doing the thinking and the cars drive themselves and 1 billion robots build all the robots and produce everything, there's going to be massive amount of equity value created for the companies that own the robots to build the robots. All that money is going to flow into Bitcoin. On the margin, I think the direction of travel is we will be incorporated into more and more indexes, and I think eventually we will be incorporated in the S&P 500. I don't know when, right? To the extent that the S&P 500 stays relevant, right? The risk for them is if they don't incorporate the innovative tech companies, then they become irrelevant and they underperform versus QQQ or some actively managed fund. So there's an incentive, but on the other hand, organizations have a degree of risk aversion and inertia to them, so some move faster than others. I think that maybe the salient point, which is interesting, is yesterday it came out that Vanguard is our biggest shareholder, 20 million shares of MSTR. And of course, Vanguard, it illustrates a lot of points. First of all, the CEO and the management team of Vanguard doesn't embrace crypto and doesn't embrace Bitcoin at all. But it doesn't matter what they think, because the funds they run are passively investing in this, whether they like it or not. And it seems inevitable that passive capital will definitely drive this movement. But at the end of the day, the winners in this market are people that have conviction and capital, and they're willing to look out a decade. And that's the advantage of the Bitcoin maximalist, right? Like we can go harder than anybody else. We can outlast anybody else. If you look at my best speech, by the way,
Yeah.
I think my best speech is at the Atlas Society, if you go and you pull it. And if you look at me, I'm quite confident and comfortable and articulate, and I didn't have any concerns whatsoever. I think Bitcoin that night had crashed from 66,000 down to 19,000, and it was trading below 20,000. And I had friends in the audience said, yeah, you were so persuasive. I went and I bought Bitcoin that day. I felt like I didn't have enough. Well, we were buying it at 19,000, 18, 17, and 16,000. I was just as convicted then as I am now. I didn't feel any different, right? The shorts, they can't handle that, right? Their brains don't work that way, right? I mean, they're not acting from fundamentals or first principles. My view is just, well, it's pretty obvious Bitcoin's oversold due to the crypto leverage coming out of the system. That makes it less risky and a better buy today than it was at 50,000. Why wouldn't you buy more? People ought to be, they ought to be focused upon generating a theory of BTC-backed equity and a theory of BTC-backed credit based on first principles in corporate finance, but then combine it with practical reviews of the equity capital markets and then the credit markets. Basically, the theory of equity is I'm valuing the equity based on future cash flows, a forecast of future fiat cash flows. And the theory of credit is I'm valuing the credit, I'm giving it a credit rating based upon forecast future cash flows. So the issuers of credit don't have any money, and the issuers of equity don't have any assets. And yet you've got the equity capital markets and the credit markets based upon investing in equity not backed by assets and credit not backed by assets. And I think that the big idea is to turn the world inside out and value equity based upon assets and asset growth rates, right? And value credit based upon the assets that back it.
According to Michael Saylor, Bitcoin is the ultimate investing indicator in the globe, reflecting inflation, global productivity, technical advancement, and even chaos. He asserts that money will inevitably flow into Bitcoin, regardless of whether the world becomes more stable due to conflict and currency devaluation, or more efficient through automation and artificial intelligence. He envisions a time where enormous amounts of equity are created by robot-driven productivity, with a large portion of that value ending up in Bitcoin. Even while organizations like Vanguard do not now support Bitcoin ideologically, he thinks it will eventually be incorporated into key stock indices like the S&P 500 as its use by forward-thinking businesses and passive investment funds increases. Saylor places a strong emphasis on faith and long-term planning. He reveals that during a crash, he was as certain to purchase Bitcoin. He thinks Bitcoin enables a new corporate finance model where equity and credit are supported by tangible digital assets rather than just paper promises, in contrast to traditional finance, which depends on credit and equity models backed by fiat cash flows. He even claims that by employing previously unheard of technologies, such as perpetual convertible notes backed by Bitcoin, MicroStrategy's Bitcoin strategy has already demonstrated that this new system is effective. He ultimately sees a time when Bitcoin will be regarded as digital gold and may perhaps reach a market valuation of $20 trillion. It won't feel innovative in that society, it will just be the usual. Although many academics will continue to oppose it, business schools may start teaching Bitcoin financing. Remember to like this video, subscribe to the channel, and enable notifications if you thought his viewpoint was helpful so you don't miss any updates. We'd love to know what you think about the future of cryptocurrency markets, so please share your ideas in the comments section. We appreciate your time and hope to see you in the next video.